Welcome to Evolving Things, where today we embark on a journey through time to uncover the evolution of money. Our story begins in 12000 BCE, with early human societies and the birth of commerce. Without coins or bills, people rely on the barter system, a direct exchange of goods and services. Imagine trading a portion of your harvest for a tool or a service, a simple yet effective way to meet the community's diverse needs. Fast forward to 3000 BCE in Mesopotamia. The cradle of civilization introduces the shekel, not the coin we might imagine, but barley shekels, an early form of currency. By 1200 BCE, the use of currency takes another fascinating turn with cowrie shells. These natural treasures become a medium of exchange in China and beyond. In 600 BCE, the Kingdom of Lydia in what's now modern-day Turkey introduces the Lydian stater. These coins, made from electrum, a natural alloy of gold and silver, are recognized as the first official currency. By 500 BCE, the concept of currency takes various forms across the globe. In China, bronze objects shaped like knives and spades serve not just as tools, but as mediums of exchange. 344 BCE sees the introduction of Alexander the Great's drachma, a silver coin that becomes a symbol of wealth and power widely circulated across his vast empire. The Han Dynasty of China, around 300 BCE, experiments with leather money, utilizing leather squares as a form of currency. 211 BCE marks the Roman Republic's introduction of the denarius, a key silver coin that plays a central role in Roman commerce and becomes a cornerstone of the empire's economy. By 118 BCE, China pioneers yet another financial innovation with the appearance of early forms of paper money. In the 6th century, the Byzantine Empire mints the solidus, a gold coin that becomes a standard for trade not only within the empire but across Europe. By the 7th century, as the Islamic caliphates expand, so too does their monetary system. The Islamic dinar, minted in both gold and silver, becomes a cornerstone of the Islamic economy. Come 806 CE, Japan introduces the yen, a round copper coin marking a pivotal moment in Japanese currency. This innovation is not just about the coin's material or shape, but its role in standardizing and simplifying commerce in Japan, reflecting the country's move towards a more unified economic system. Diving into the Middle Ages, we witness a transformative era for currency and finance, marked by the rise of banking institutions, the proliferation of iconic coins, and innovative financial instruments. In the 11th century, the Knights Templar, known for their military prowess, also emerged as early bankers in Europe. Their vast network across the continent allows them to offer financial services, including safe deposits and loans, acting as a bridge in the medieval financial system. 1252 CE brings the introduction of the florin in Florence, Italy. This gold coin quickly becomes a benchmark for wealth and commerce across Europe, admired for its consistent purity and weight. Shortly after, in 1284, the Venetian ducat is minted. Another gold coin, the ducat, cements its place as a standard for European commerce, facilitating trade in the bustling markets of Venice and beyond. During the 13th and 14th centuries, the concept of paper money, already familiar in China, sees further development under the Yuan dynasty. These early forms of state-issued paper currency represent a significant shift from tangible coins to paper notes, illustrating the diverse approaches to money across the globe. The 14th century also sees the advent of bills of exchange in Europe. Used for international trade, these documents allow merchants to trade without the need to physically transport large sums of money, acting as a precursor to modern banknotes and financial systems. As we sail through the 15th to the 17th century, the seas of commerce and currency swell with innovation and expansion. In the 15th century, the Spanish dollar, a silver coin, begins its journey across the world's oceans. Esteemed for its high silver content, this coin becomes a staple of international trade. As we move into the 17th century, the Dutch guilder sails into prominence. The Netherlands, a burgeoning hub of global trade, sees its currency become the dominant force in international commerce. Venturing into the 18th century, this century is defined by the adoption of the gold and silver standards and the tumultuous journey of currency in the American colonies. As countries seek stability in their economic systems, many adopt the gold and silver standards. This pivotal move ties the value of currency directly to specific amounts of precious metals. The period of 1775 to 1791 sees the introduction of continental currency, early American paper money issued to fund the Revolutionary War. The 19th century unfolds with a dramatic expansion in the use of paper banknotes representing deposits in banks begin to circulate more freely, offering a new level of convenience and flexibility in transactions. Simultaneously, many countries formally adopt the gold standard, pegging the value of their currency directly to specific amounts of gold. In 1862, amidst the turmoil of the Civil War, the United States takes a significant step by issuing paper currency known as greenbacks. Not backed by gold or silver, greenbacks are legal tender based solely on the government's promise, a bold experiment that plays a crucial role in financing the war effort and lays the foundation for future monetary policy in the U.S. The 20th century marks a pivotal shift in the world of finance, from the tangible backing of gold to the intangible realm of digital currency. As the century progresses, most countries gradually move away from the gold standard, seeking more flexibility in monetary policy. In 1944, the Bretton Woods system introduces fixed exchange rates based on the US dollar, itself pegged to gold. The 1950s bring about the introduction of the Diners Club card, the first modern credit card, revolutionizing personal finance by introducing the concept of credit to everyday transactions. As we move into the 1970s, the development of electronic money marks the beginning of a new era in banking and online transactions. The 1990s witnessed the emergence of digital currencies and online payment systems. Electronic transactions, credit, and debit cards become commonplace, fundamentally altering consumer behavior and business operations. In 1992, the Maastricht Treaty leads to the creation of the euro, a monumental step towards financial unity in Europe, demonstrating the power of collective economic agreements in shaping the future of currency. The 21st century welcomes the introduction of Bitcoin in 2009, the first decentralized cryptocurrency, challenging traditional notions of money and sparking a wave of innovation in digital finance. Between 2010 and 2020, a surge in mobile payment platforms like Apple Pay and Google Pay, making transactions more seamless than ever before. From the gold standard to Bitcoin, the journey of currency in the 20th and 21st centuries reflects humanity's relentless pursuit of more efficient, secure, and inclusive financial systems. What do you think the future holds for our global economy? Share your thoughts in the comments below. And remember, while we strive for accuracy, navigating history's vast ocean can lead us astray. If you've spotted any inaccuracies, let us know. Your insights enrich our collective journey through time. If you're fascinated by the evolution of currency and crave more explorations into the past and future of technology and society, hit that like button, subscribe to Evolving Things, and share this journey with fellow curious minds. Until next time, keep questioning, keep exploring, and stay tuned for more tales of evolution and innovation.